In this video, guys, we're going to ask the question, if most traders lose, why not just trade against your own intuition? Hey traders, warm welcome to you. So this is a really good question, right? If most traders lose, and let's say you're losing at the moment, we all go through periods, especially at the beginning of our career, where we just can't seem to get things right. Wouldn't an easy solution just be to just go against your intuition, right? So if you think it's a long, then go short. If you think it's a short, go long. This really great cartoon that I've done for you here, guys. Here's Mr. Trader, and let's call her Mrs. Trader. We don't have as many misses as we should in trading. Mrs. A is trading and she's not doing very well. But she thinks, okay, you know what? Actually, if I fade myself, my account balance is going down, I can actually reverse it and my account balance could be going up. So what is the actual logistics of that? Is it even possible? Well, in theory, it sounds great, right? If you're consistently losing, we'll just do the opposite of what you are doing now and you'll consistently win. Unfortunately, it's not as easy as that because we can't kind of trick our intuition. So if our intuition is saying go long or short, it's not necessarily the market calls that are doing us the damage. It's things like where we get into the market, where we come out of the market if we're wrong, where we come out of the market if we're right, how often we're trading, the type of trades we're going with, the size of our positions. It's a multitude of things. And so, yes, you could kind of force yourself and say, well, I think that's a long, and then you go short. But really, if you think about what would happen when you did that, so let's say the market's going lower, right? Okay, and we'll draw a little thing here just to example. Let's say the market's going lower and you think, right, I'm going to go long. It's kind of double bottomed, it's held a little bit here, it's sort of big level support, whatever. I'm going to go long and I'm going to put my stop here. So to fade that, you would say, right, well, I'm going to go short, I'm going to put my target here and my stop here, whatever it may be. Now, the problem you've got from that is that even if you did that, you would struggle to truly believe that that trade was right, because by going against your intuition, you're basically saying, I don't trust your judgment. I don't trust your judgment at all, so much so that I'm willing to bet my hard-earned capital against my own judgment. Now, think what that is saying to your mind. It's basically saying, listen, you're completely wrong and so wrong that I'm prepared to put stake some money on it. So that's a real screw with your brain. And what would happen is, let's say the market's going lower and it kind of pops up and stops you out. You're going to go, well, I should have gone with my intuition. My intuition said it was a long, but I went against it, it was a short. And so that's already screwing with your mind. If it goes down and tags you and makes a profit, you might say, okay, that's great, I'll do it again. And then you do it again and maybe it stops you out, because don't forget, guys, it's not you're never going to get 100% success rate. It might appear like that when you're losing consistently, you're chugging away and can't seem to get any traction. But that's because there are things like, hey, I'm going to move my stop, or I'm going to take my position early. You know, how many times have you taken a trade and decided to come out of a stop early? Very rarely. It's rare that people do that. People tend to take profits early. So how many times has the market come down away from you and you've gone, you know, I don't like it, I'm going to come out, and you've pulled the stop up? That's a rare thing to do. Most people will pull the stop away. But you think about a limit, the price is going in your favor. As soon as it's close to it, you might well want to move the limit and take the profit. And so that will still be there regardless of whether you're long or short and have gone against your intuition. So to go against your intuition, you've got to do it on every single level, which is frankly almost impossible. You've got to not only have your market call, but you've got to then do stuff like hold positions further than you would when you had a stop loss. So normally your stop is like, oh, I might move it a little bit because that's what's perhaps causing you problems. We don't need to go into the details of all the things that we know cause us problems in our trading. Maybe moving the stop loss, maybe you've gone in too much size, maybe you've traded out of boredom. You know, so that, you know, how do you know then your intuition says I want to take the trade? Well, I don't take the trade. How far do you go? Well, I'm not going to trade when I think I should trade and trade when I shouldn't think I should trade, because that might be a problem for you. You might be over trading. And how does going against that solve anything? Just by not trading at all? Well, no. So you can't fix that problem. And by moving kind of stops and limits, that's hardwired in our brain, and we're trying to go against that anyway. We're trying to run the positions longer and trying to cut the losers shorter so we get that good risk-reward ratio. So going against the intuition would be what we're trying to do anyway when we're running a position. We're trying to not grab snatch-up profits. We're trying to not just grab things. We're trying to not get frustrated when we get stopped out. So you can't force yourself to behave in a manner other than you do. Now, What you can do is you can say, okay, my intuition is saying, you can train your intuition, right? You can say, listen, I feel like I'm predicting the market too much. I'm thinking there's too many trades when there aren't any. And so you can add rules in that help your intuition. Like, okay, I think it's going long. Well, why do you think it's going long? Does it match this criteria? Or no, it doesn't. I think it does. Well, okay, note it down and let's note these things down for a week and let's see if you're right. If you're right, then maybe we can add some kind of quantifying metrics to it and act on it. If not, you can say, listen, you need some work on your intuition. Your intuition isn't quite there. So going back to the point of, okay, we've done a video before about intuition. I'm a big fan of it, even though it's very hard to quantify. But going back to the point of, can you fade yourself? No is the answer. You can't. I don't know anybody who's successfully faded themselves. Now, can you fade others? There have been studies out there and there have been success stories of times when people have faded others, i.e. they've said to them, okay, you're trading now, and they've actually been trading against them. Now, perhaps there's a moral issue, but again, if you're sharing profits with them, perhaps not. There are times when there are people who have been put on demos, supposedly on demos, and then they've actually been trading real money, or they've been trading 10 times the amount of money they thought they were going to trade. All these little tricks and stuff. But ultimately, it was very difficult to get around the fact that people behave incorrectly, if you like, so not the right word, but incorrectly in so many ways in trading that just by fading one, the long or short, in theory sounds good, and maybe if you're the other side of that trade, you'd probably make some money, but in theory it's good, but actually there's so many pieces of the puzzle that need to go into it. It's never going to work. So the best thing you can do is to recognize that your intuition is leading you astray, to recognize that what is causing the losing trades, drill down into it, and then try and work out one thing at a time to reverse it, or to at least prevent it from causing any loss. Right, guys, take care, keep your risk management, whatever you're doing. Bye-bye.